Hey guys, it's Sasha. UBS just posted the biggest ever quarterly profit for any bank on the planet ever, earning $29 billion. And of course, on March 19th, 1 quarter ago, UBS just happened to acquire Credit Suisse. When UBS agreed to buy Credit Suisse, the Swiss government passed emergency laws literally overnight to enable the transaction to take place. They also immediately announced that because Credit Suisse is so horribly insolvent, all bondholders of AT1 bonds immediately lost 100% of their investments. The total amount that Credit Suisse owed in AT1 bonds that were written off with no scrutiny, with no due process, with no analysis was $17 billion. So at the start of the quarter, UBS got to write off $17 billion that they would otherwise have had to pay out because there was absolutely no way that they could possibly afford to pay that money to the bondholders. And just 3 months later, they announced a quarterly profit of $29 billion, which was more than double the previous record set by JP Morgan in 2021. The story originally was that there was just not enough money to pay those bondholders, so the Swiss government they had no choice but to tell everyone who had one of those bonds to fuck off. And of course, absolutely nobody could have seen this one coming. Credit Suisse is a publicly traded company. It has shareholders. So how the fuck does a public company that has shareholders just get sold at a 60% discount over the weekend with hundreds of billions of dollars in extra perks being given to this other company? Because, usually when that happens, when a company is being sold, the shareholders of the company, the shareholders of the bank get to vote. Would you like to go and lose 60% of your investment by being sold to UBS? Or is there maybe a better way? Okay, maybe some random guy on YouTube saw it coming, but mass media were busy reporting that UBS is doing this deal under duress. They're getting a really bad deal. They would much prefer not to do this deal. There was evidently a giant pile of horseshit smothered all over this because we have just seen the biggest orchestrated theft of money by a bank in history. Out of the $29 billion worth of profit in the last quarter, $27.9 billion came directly from the acquisition of Credit Suisse from unraveling assets, and $1.1 billion came from UBS's old banking business. So this acquisition that was really bad for UBS earned UBS a profit equivalent to roughly 6 years worth of profits and about 25 quarters worth before they made this acquisition. If UBS paid out every single AT1 bondholder in full, they would have still posted a $12 billion profit, which would almost be a world record anyway. And remember that UBS paid $3.8 billion, 3.5 billion francs, to acquire Credit Suisse. It was basically given to them for free. I said at the time that this valuation is grotesque. It is ridiculous. This is an absolute piss take. The shareholders were robbed in plain daylight by the Swiss government because they got nowhere near the fair value for their share, not even remotely close. Remember, UBS paid that $3.8 billion for the whole bank, and then just 3 months later, looked at their acquisition, looked at what they just bought, and accidentally found out that they magicked $28 billion just out of thin air. Wow. And remember how the Swiss government said that it was so bad that they had to offer financial help to UBS in order for them to do this deal. It was patently obvious at the time that this is complete bullshit. You can go and watch my previous video where I say as much. The Swiss government gave UBS a $10 billion guarantee on any credit losses that they were going to experience as a result of the takeover. The first $10 billion was covered by the government, and the Swiss National Bank then gave UBS another $100 billion worth of liquidity via liquidity line, basically free cash flow to help through this very painful and very difficult time. As UBS announced their earnings, they said that they will now not need to use the government's $10 billion loss guarantee or the $100 billion liquidity line. Apparently, just 3 months later, it turns out nobody could have seen this one coming. It just turns out that after all, when they bought Credit Suisse basically for free, the bank was actually worth more than nothing. I know that nobody trusted the Swiss banking system much before. It's all murky, obscure, and shady. But what the actual fuck is going on here? It was obvious when this acquisition was rushed through that it is a scam because no due diligence was carried out. It was impossible to carry it out in 1 day, which is how long this whole thing took. It turns out that if maybe the Swiss government didn't intentionally rush this deal to make it happen in 1 day, then maybe somebody would actually look at the numbers, maybe do some actual analysis and realize that the valuation is out not by a little bit, but by an order of magnitude, despite Credit Suisse being a steaming pile of garbage at the same time. UBS just made 10 times as much money in profit in the first quarter after the acquisition as they spent on the purchase, which shows that the valuation was a piss-take global. While Credit Suisse bondholders and Credit Suisse shareholders got completely fucked, UBS stock is up 46% since this acquisition. That, reminder, was really bad for them. Before Credit Suisse was basically forced into bankruptcy and the acquisition by UBS, they had a shareholder equity of 45 billion Swiss francs, about $51 billion. Although they weren't performing very well, their net asset value was increasing at the time, up by 1.2 billion francs in the 12 months to Q4. So Credit Suisse had $51 billion worth of equity, give or take. UBS paid 3.4 billion francs for the bank, and the result is that they just posted a goodwill of $29 billion. If you add those two together, you get $32 billion, so about 19 billion short of that 51 billion. 19 billion that just mysteriously disappeared, which is funny because that just happens to be extremely close to the $17 billion that was written off in those 81 bonds, plus, a couple of billion, but what's a couple of billion between friends, eh? Some people might point out that Credit Suisse was in trouble already. It was about to go bankrupt, so the price reflected the risk that UBS was taking on. And the Swiss government and financial regulator FINMA are bound by a fiducial duty, by a legal duty to, not commit really obvious fraud. But for whatever reason, the entire deal was forced to be struck over a weekend. The bank was in trouble for several months beforehand. There was plenty of time for somebody to do something. It was announced at the end of the weekend on a Sunday evening. No alternative bids were considered. Absolutely no other options were thought through. There was no consideration whether perhaps any other bank, maybe outside Switzerland, or any other investors would be up for paying more than 7% of the book value, which, would be maybe fair. There was absolutely no consideration as to whether, the shareholders, the owners of the bank, could possibly have any say on whether this sale was fair. The option of nationalizing Credit Suisse was never considered, even though the government was happily taking on all of the risk associated with UBS buying it. There was exactly zero due diligence done, and it was intentional, because everyone who was involved in this deal is corrupt and is now taking a slice of the most obscene bank profit the world has ever seen. UBS took on no risk at all when they bought Credit Suisse, and the truth is, they knew exactly what they were doing. They knew they were being given free money by the government, but above and beyond that, the Swiss government gave them free liquidity and guaranteed another 10 billion worth of losses. And that's a pretty nutty deal when Credit Suisse only had $264 billion worth of loans, most of which were very low risk. The government guaranteed a total loss rate of 4%, which pretty much eliminated any credit risk for UBS on the entire portfolio that they were buying. 81 bondholders are currently suing the Swiss gangsters, Sorry, I think I misspoke. The Swiss government for stealing their money. Their argument is that at the time, when bonds were written down to zero, the assumptions made by the Swiss government over the 3 seconds that they spent thinking about it, those assumptions were wrong. And if the right assumptions were used, the bond devaluation would not have happened, and the emergency laws would not have had to be passed in order for the shareholders to not be able to vote on it, to fuck them all over so that UBS could go and post a new record, a new world record profit, double the previous one. We can now see that just 3 months later, they are, of course, the people suing are completely right. Their money was stolen, and it was given to the bankers for no apparent reason whatsoever. But the problem is that they are suing the Swiss government, who orchestrated this whole thing in Swiss courts, so I really wouldn't hold my breath if I was a Credit Suisse 81 bondholder. Those same courts didn't seem to have any issue with the way that the acquisition was forced through. They didn't seem to have any issue with emergency laws being passed with absolutely no debate. They didn't seem to have any issue with the owners of a business not having a say in their business being sold. They didn't seem to care that it took less time to push the deal through than it would actually take a person to read the legal merger agreement. The interesting question now is whether foreign governments will now designate this deal as grotesque state help for UBS, which is essentially exactly what it is, because if that happens, UBS might very quickly find out that business in the US and business in the EU is going to be a lot harder, where, rules on state help are pretty strict. And here's the thing. If the Swiss government let Credit Suisse collapse, that would definitely be worse. There is no argument here. That's not the point I'm making. The issue is that the way that they solved this problem reeks of corruption, smells really bad of backroom deals and of greed. The system is rotten, and this is not confined to Switzerland. No bank in the world can sustain a full-on bank run where 40 or 50% of the depositors just turn up to take their cash, something we saw happen with the US banks. And the US authorities seem to just watch from the sidelines as Silicon Valley Bank, First Republic, Silvergate and Signature banks all collapsed one after another. The regulator did not seem to care before it all went down that some of these banks were incompetently managed, being very heavily dependent on crypto. The Federal Reserve also didn't seem to care that its own interest rate increases went beyond any stress testing that they themselves did on US banks, forcing this whole problem to happen. Bonds that those banks held on their balance sheets on low rates lost value because nobody wants to go and buy a bond paying low yields when you can go buy shiny new ones that pay 10 times as much. So obviously all of the stuff that they acquired before rates started going up suddenly wasn't worth as much as when they first bought it. So the banks suddenly became illiquid just because of the Fed's rate hikes and no other reason. And if the Fed did not think that bit through before it went south, if they did not consider, if they forgot to think about what would happen to big US banks when interest rates went up at the fastest rate in history, including the spring and summer when there was absolutely no justification for more rate hikes, what else did they forget to take account of? What else did they just accidentally forget to think about? Did anyone at the Fed consider the impact on corporate real estate debt? Did anyone at the Fed consider the impact on unsecured retail debt? Did anyone at the Fed consider what would happen if a wage price spiral started as regular people struggled to pay their bills? Well, I guess not, because those things are not as important as lining your pockets through dirty backroom deals.